Florida has always been the land of endless sunshine, booming migration, and sky-high home prices. Everyone dreams of owning a slice of paradise. But wait, here's the shocker. The very markets that made people rich are now collapsing faster than anyone imagined. Because the real danger isn't the heat, the hurricanes, or even the interest rates. It's the soaring insurance costs and hidden risks, quietly crushing homeowners across the state. Tonight we count down 10 Florida cities where the next wave of the housing collapse is already forming. Cities where paradise is starting to cost too much to keep. Stick around, because by the end you'll see just how quickly sunshine can turn to shadow. 10. Jupiter, the glittering gem of Palm Beach County, has long been seen as a playground for the ultra-wealthy. Between 2020 and 2022, the city's luxury real estate market was on fire. Million-dollar homes were selling in days, and developers couldn't keep up with the unprecedented demand. But here's the shocking part. Median home prices have now slipped nearly 11% year-over-year in 2025, and the number of multi-million-dollar listings has tripled. The context here is simple. Jupiter's paradise image gave buyers the confidence that luxury would always hold value. But the reality is far more fragile. How does this affect homeowners and investors? Let's break it down. Annual insurance premiums that once averaged $8,000 are now topping $20,000, even for properties well inland. Add to that HOA fees, mandatory flood coverage, and county property taxes, and monthly carrying costs for a typical luxury home now exceed $3,000. That's before you factor in maintenance or storm preparation. Buyers who once rushed to buy cash in 2021 and 2022 are now sitting on the sidelines waiting for better deals. Realtors report that showings end in silence, ocean view condos sit vacant, and gated communities once humming with construction now echo with the sound of stalled sales. Even Jupiter's rental market is cooling, with luxury short-term rentals seeing flat or declining occupancy rates. Why does this matter? Jupiter isn't just a city. It's a microcosm of what happens when paradise meets rising costs and overconfidence. This isn't just a local correction. It's part of a larger statewide pattern in Florida, where insurance hikes, soaring taxes, and market saturation are converging. For investors and homeowners, it's a warning. Even the most exclusive markets are vulnerable to structural pressures that no amount of wealth can escape. Understanding Jupiter's shift gives viewers a lens for predicting trouble in other Florida cities. That point was critical. But here's the kicker. If you think this is only about insurance, you're missing half the story. Combine these rising costs with slower migration, high interest rates, and inflation, and Jupiter isn't just slowing, it's signaling a broader shift in Florida's luxury market. And when the wealthy start questioning the value of paradise, the effects ripple across the entire housing ecosystem. 9. Pensacola, perched on Florida's panhandle, became one of the state's pandemic-era stars. Between 2020 and 2022, home prices soared over 65%, driven by remote workers and retirees fleeing high-cost northern cities. The context here: Pensacola was marketed as affordable paradise, low taxes, calm beaches, and good schools. But the application shows the other side of that boom. By mid-2024, home prices had fallen nearly 14%, and insurance premiums, following repeated storm seasons, doubled or even tripled. Flood maps have pushed thousands of homes into newly designated risk areas, triggering mandatory coverage and higher costs. For residents, this isn't just numbers on a page, it changes everyday decisions. Some neighborhoods, particularly near Perdido Key, now cost more to insure than to rent, forcing younger families to move to Alabama. Investors who once flipped properties for quick profits are now selling below purchase price just to escape. Local contractors report canceled building permits and stalled developments. The framing here matters. Pensacola illustrates how a sudden boom, unbacked by infrastructure and risk planning, can reverse violently. Paradise that once seemed infinite is now proving costly. But if you think Pensacola's story is unique, hold that thought. Other inland markets are about to reveal why Florida's housing troubles aren't just coastal. 8. The Villages, America's most famous retirement paradise, represents a different kind of bubble. For decades, retirees poured in, chasing sunshine, golf courses, and social community. Between 2010 and 2022, this market seemed invincible. Home values climbed steadily, and inventory never lasted more than a week. Contextually, the villages thrived on stability and predictable growth. Property taxes have climbed 30% over 3 years, HOA fees are soaring past $600 per month, and insurance costs have doubled for many residents. Fixed-income retirees are hit hardest. Homes that once sold in days now sit on the market for months. Even resale units, previously the strongest segment, are slowing. Many retirees are leaving for cheaper southern states, like Georgia, Tennessee, or the Carolinas. Developers are still expanding, but the new sections are partially built and waiting for buyers who may never come. The Villages demonstrates that even markets built on predictability can crack under cost pressures. Rising fees, inflated taxes, and insurance hikes can turn a lifelong dream into financial strain. This isn't just retirement risk. It's a warning for every over-leveraged, highly marketed community in Florida. That point is powerful, but the Villages' lessons pale compared to what's happening in Florida's fastest-growing cities. Number 7. Northport skyrocketed during the post-pandemic migration surge, marketed as affordable, spacious, and family-friendly. Between 2020 and 2022, developers couldn't build fast enough. Entire subdivisions emerged with "coming soon" signs and glossy billboards promising luxury homes from the $300 Ks. The context: Northport seemed like the future of Florida living, but application shows the fallout. By 2025, inventory has surged over 80%, and median home prices have fallen 12% year over year. Insurance rates have tripled, HOA fees bite hundreds per month, and property taxes creep higher with every reassessment. Builders are cutting staff, open houses go hours without a single visitor, and homeowners are underwater, unable to sell without taking losses. Migration is slowing. Younger families are opting for inland towns or leaving the state entirely. Northport's rapid growth without balance created a structural correction. Too many homes, too few buyers, and reliance on temporary demand have turned opportunity into caution. If you think inland cities are immune to Florida's housing pressure, Northport proves that rising costs and oversupply don't discriminate between coast and interior. At 6, Punta Gorda, nestled between Sarasota and Fort Myers, was long a secret for smart retirees. Picturesque canals, peaceful streets, and affordability. Pandemic-era demand pushed prices up, mostly from cash-rich retirees and second-home buyers. Contextually, it was serenity packaged in coastal charm. By 2025, waterfront insurance premiums jumped from $3,500 to over $10,000 annually, and flood zone expansions forced many into high-risk designations. Condo owners faced special assessments exceeding $50,000 per unit. Builders offered $50,000, $100,000 discounts to move inventory. Cranes stand idle, and restaurants see fewer seasonal visitors. Retirees are reconsidering, some moving back north, others cashing out early. Punta Gorda's situation illustrates that coastal serenity comes with a hidden price. Even affordable retiree havens are vulnerable to insurance shocks, infrastructure strain, and market saturation. And remember, if insurance alone can shake Punta Gorda, wait until we see how luxury markets are collapsing under multifaceted pressure. 5. Winter Haven, the inland heart of Polk County, became a haven for buyers priced out of Tampa and Orlando. Lakeside properties in quiet neighborhoods drove a surge between 2019 and 2022, with home prices rising over 60%. Context: it was inland safety from the coastal booms. By 2025, inventory has doubled, homes linger months on the market, and sellers are trimming 10 to 15% to attract buyers. Insurance premiums are up 50% or more, taxes have climbed post-pandemic, and Airbnbs report 25% lower occupancy. Local infrastructure is struggling. Overcrowded schools, congested roads, and lagging amenities. Winter Haven proves that distance from the coast isn't protection. Affordability is the true driver of housing stability. When costs rise inland as well, the fall becomes statewide. The inland story sets the stage for why Florida's luxury markets aren't just slowing. They're facing unprecedented contraction. 4. Naples has long been Florida's crown jewel of luxury living. For decades, it symbolized wealth without worry. Pristine beaches, art galleries, and waterfront estates attracted America's elite. Contextually, Naples was built on the mantra that real estate never goes down, creating a perception of invincibility. By 2025, that illusion is crumbling. high-end property prices have dropped 15%, and listings for multi-million-dollar estates are up 60% year over year. Homes that once sold off-market now linger for months, and luxury open houses echo with silence. Insurance premiums for waterfront homes have exploded past $20,000 annually, on top of six-figure HOA fees and new flood zone requirements. Even international investors from Europe and Canada have pulled back due to rising interest rates and climate risk fears. Rentals, once a safety net, have softened. Luxury beachfront condo rents are down 10 to 15%. Naples shows that luxury alone cannot insulate a market from financial and psychological pressures. Wealthy homeowners are beginning to question whether Florida's costs rival California's, and the allure of invincibility is fading. If Naples' ultra-rich market is softening, the next cities will reveal how even mid-tier urban areas are facing simultaneous crises. At 3, St. Petersburg, the jewel of the Gulf Coast, grew rapidly during the 2020 to 2022 boom. Luxury condos and sleek waterfront towers rose faster than demand, creating the illusion of unstoppable growth. Context: St. Pete balanced culture and affordability, attracting retirees, remote workers, and investors alike. By 2025, downtown condo vacancies have climbed 30%, and older building resale prices have plunged. Post-Surfside structural laws forced multi-million-dollar repairs, leading to tens of thousands in special assessments. Insurance premiums doubled in 3 years, and new flood maps pushed thousands into mandatory coverage. Migration, once a secret weapon, has slowed. Newcomers are cautious, priced out, or deterred by utility and insurance costs. Realtors coined a term, the Bayable, a mix of speculation, overconfidence, and climate risk. St. Petersburg demonstrates that overconfidence in urban development can collide catastrophically with structural costs and regulatory changes. Even mid-size urban markets can crash under layered pressures. And while St. Pete struggles, some of Florida's fastest-growing coastal cities are about to show the full impact of pandemic-era overexpansion. 2. Port St. Lucie became a pandemic darling, attracting remote workers, retirees, and investors seeking coastal affordability. Between 2020 and 2022, home prices surged nearly 80%, and developers raced to meet seemingly infinite demand. Contextually, it appeared to be the ultimate suburban escape. By 2025, the boom has collapsed. Inventory has surged 90%, home sales are down, and some properties now sell below their 2022 construction costs. Builders offer unheard-of incentives: $30,000 design credits, mortgage rate buydowns, even free solar panels. Traffic congestion, school overcrowding, and delayed road expansions are eroding quality of life. Insurance premiums jumped from $2.800 in 2020 to over $6.500, forcing some homeowners to go uninsured. Short-term rental markets are oversaturated. Airbnb listings nearly doubled, and long-term rents are falling. Port St. Lucie exemplifies what happens when boomtown optimism meets economic reality. Infrastructure collapses, carrying costs spike, and the dream of affordable coastal living unravels. And if you thought Port St. Lucie was extreme, the #1 city will reveal the full weight of Florida's luxury and environmental crises. And at 1. Fort Lauderdale, South Florida's luxury playground, epitomizes the convergence of market, insurance, and environmental pressures. Once a haven for yachts, beachfront penthouses, and foreign investors, it now faces a reckoning. Context: condo values historically climb steadily, driven by demand from wealthy buyers, international investment, and a booming short-term rental market. By 2025, the cracks are undeniable. Condo values fell 12% overall, but some coastal units lost 25% of appraised value due to new flood risk data and mandatory repair assessments. Insurance premiums now top $25,000 annually, forcing owners to sell at steep discounts. Developers freeze mid-construction, pre-sale towers reopen units for relisting at lower prices, and luxury waterfront homes are trading below assessed value. Corporate relocations and remote work reduce short-term rental demand, pushing vacancy rates and forcing landlords to slash rates. Environmentally, sunny day flooding has become weekly in low-lying neighborhoods, turning streets into temporary canals. Fort Lauderdale shows the ultimate convergence of financial, market, and environmental stressors. The city that once defined Florida's coastal success now serves as a cautionary tale. The higher the skyline, the harder the fall. From Jupiter to Fort Lauderdale, inland to coast, these 10 cities illustrate that Florida's housing boom is over and the collapse is spreading.